You're tuned into Highway Herald, your roadmap to the latest in auto and trade. The trade winds have shifted, and they're blowing hard north of the border. In early 2025, as U.S. tariffs soared under President Trump's protectionist drive, Canada launched a $214 billion global trade blitz. While Washington tightened the screws on steel and aluminum, Ottawa was forging bold deals across Southeast Asia, Latin America, and Europe, catching the eyes of former U.S. allies. Now, American automakers and farmers are left wondering, has the U.S. stalled while Canada speeds ahead in the trade fast lane? Number 5. Protectionism sparks a cross-border collision. In March 2025, President Trump reignited a trade war by imposing a 25% tariff on Canadian steel, aluminum, and other imports, plus 10% on energy. The impact was immediate. Auto part exports plummeted, foreign investments shifted, and supply chains unraveled. Canada's economy, closely tied to the U.S., felt the shock. Prime Minister Mark Carney responded swiftly with retaliatory tariffs on 30 billion Canadian dollars in U.S. goods, from bourbon to farm produce. "We will act firmly and clearly," Carney stated, as a long-standing alliance buckled under pressure. By May, Canada posted a record $7.1 billion Canadian dollar trade deficit. U.S. exports dropped 15.7%, and vehicle-related goods fell nearly 23%. A modest 2.9% growth in non-U.S. exports wasn't enough to compensate. Meanwhile, behind-the-scenes diplomacy began. Trump and Carney explored a potential trade and security pact to avoid deeper retaliation. If talks stall, Canada may escalate, using critical mineral leverage or further tariffs. Both sides now face a tense crossroads in a trade relationship built over decades. But even as trade talks simmered, Canada wasn't just playing defense. It was accelerating its pivot to new markets. Number 4. CEPA with Indonesia, Canada's entry into the fast lane of the Indo-Pacific. While U.S. trade tensions dominated headlines, Canada made a bold move toward the Indo-Pacific. On December 2, 2024, in Jakarta, Trade Minister Mary Ng signed the Canada-Indonesia Comprehensive Economic Partnership Agreement, CEPA, finalizing talks that began in 2021. More than a trade deal, CEPA marks Canada's pivot toward Asia. By 2023, Canada-Indonesia trade reached 5.1 billion Canadian dollars, and by late 2024, it was on pace for 2.9 billion US dollars. Once CEPA is ratified in 2026, it will eliminate tariffs on 95% of Canadian exports, from agriculture to medical devices. Indonesia, with nearly 300 million people and 5.1% annual growth, is a strategic match. Aligned with Canada's 2.3 billion Canadian dollar Indo-Pacific strategy, CEPA supports green tech and EV supply chains, tapping into Indonesia's rich deposits of tin, nickel, and bauxite. The outreach didn't stop there. Early 2025 saw Canada expand missions to Thailand and Cambodia. Canada isn't just diversifying, it's emerging as Southeast Asia's preferred stable trade partner in a shifting global economy. Before we delve deeper, we'd appreciate it if you could hit that subscribe button and support Highway Herald. Your engagement keeps this channel running strong, and your feedback steers us in the right direction. Now, while Canada raced ahead globally, the U.S. economy began feeling the heat back home. Number 3. America's Heartland feels the burn. As Canada surged ahead with global trade deals, the U.S. economy began to falter. Just weeks after Trump's 2025 tariff hikes, industrial states like Michigan, Kentucky, and Florida saw rising costs, stalled shipments, and factory slowdowns. What started as a trade tactic quickly spiraled into economic strain. Auto manufacturers were hit hard. Tariffs on steel and parts drove up vehicle prices by thousands. Automakers were forced to either absorb the cost or pass it to consumers, who felt the impact on showroom floors. Agriculture suffered too. Canadian retaliation targeted key U.S. exports like Oklahoma wheat, Florida citrus, and Kentucky bourbon. Distribution logjams and falling demand hurt rural communities deeply dependent on trade. Even groceries grew more expensive, as both Canadian and local producers raised prices. Trade tensions prompted quiet reconsideration of the USMCA. Meanwhile, some U.S. firms explored relocating to Canada or Mexico, though Mexico faced its own tariff threats. What began as a short-term strategy now shows signs of lasting economic damage. As the U.S. stumbled, Canada seized its moment, rolling out one of the most ambitious global trade strategies in its history. Number 2. Canada's global trade strategy shifts into overdrive. While US leaders debated, Canada was busy making moves. By June 2025, Ottawa had secured a massive $214 billion trade package, its largest ever, focused on critical minerals, EV components, green energy technology, and advanced manufacturing. More than a deal, it was a signal. Canada is stepping up as a global trade leader. This wasn't a random patchwork of partners. Canada reinforced ties with Japan, the EU, India, Australia, and others, presenting itself as a stable, low-risk alternative in an increasingly volatile world economy rocked by sanctions and tariff wars. The strategy paid off. Foreign direct investment surged, particularly in green industries and battery supply chains. Companies once wary of geopolitical risk began viewing Canada as the Goldilocks partner. Not too risky like China, not too erratic like the US. Trade numbers confirmed the trend. While exports to the US dipped, shipments to Asia and Latin America soared. Canada isn't just reacting to protectionism, it's positioning itself as the new hub for global stability and innovation. And with global markets leaning into Canada, one question looms. Will the US recalibrate or risk being left behind? Number 1. Pivot point. Reset or reinvention. Canada's leap forward has left the US staring into the mirror. Sure, some American industries found short-term protection, but at the cost of market access, partnerships, and global goodwill. Meanwhile, Ottawa is seizing its moment. As of June 2025, behind-the-scenes discussions between Trump and Carney hinted at a possible reset. A potential September deal might loosen the pressure, giving the US access to Canadian minerals and secure auto content flows. Canada, in turn, could reclaim deeper roles in Arctic security and US defense supply chains. But don't mistake diplomacy for dependence. Canada's alternative trade network is gaining momentum. With Asian and Latin American markets opening wider, the need for US ties is weakening, and that has Washington nervous. The real question isn't whether trade will resume, it's who will lead the next chapter. Can the US reassert itself as a global connector? Or will Canada's diversified model become the new North American norm? Verdict: a trade power shift in full gear. The US-Canada trade rivalry has shifted into a new gear, and Canada may just be pulling ahead. With $214 billion in deals signed across multiple continents, Canada has emerged as a magnet for manufacturers, tech innovators, and supply chain leaders looking for predictability. This isn't a coup, it's a calculated pivot. And while the US grapples with the fallout of its tariff playbook, Canada is rewriting the rules and setting the pace. Will this trade transformation become permanent or reverse if Washington changes course? Can the US win back the loyalty of allies now hooked on Canadian reliability? And which model will shape North America's future? Protectionism or partnership? We'd love to hear what you think in the comments. If you found this video insightful, be sure to subscribe to Highway Herald for the latest vehicle updates and in-depth analyses. Your support helps us bring you the best in automotive content. Please leave a comment below to start a conversation. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.